Hello there. In this video, we're looking once again at the Aussie dollar, and we're taking the bullish view here. And the bullish view basically means that from March 2020 up until January 2021, we had a wave one occur of this larger E wave to the upside. So E wave is the last wave in the correction. So once this hits its high, we're going to see lower than the point at which this started. This is a rule in RES wave. So this gives us some scope for understanding what the market's going to do and planning accordingly and trading accordingly. So analysis used with trading is very easy with RES wave, simply because it gives you the levels required at the small degree, which is important if you want to take a position with small risk. So we had the A wave zigzag, a B wave zigzag, which is why we had a pretty deep, long and choppy C wave, which is a type 1 weak 5 wave move. Wave 1's a zigzag, wave 3 is a zigzag, and wave 5 is a zigzag. And then at the lows, we can see a zigzag and a 5 wave move, so the D and the E. So the first two waves were small, the last two waves are small, the largest wave was the C wave. Okay, now RES wave is different than Elliott wave. So if you're an Elliottian, you might think that this is a triple zigzag, but it's not. So now just zooming into the 1 hour chart. I know there's a lot of things on the page, but I'll try and stretch it out so you can see what it all means. So here is just the subdivisions for the D wave and the E wave. So at this point, the support was formed with confirmation at the break of the E wave. Support is at 63 cents. We created a large-ish impulsive move up for wave one, because now we're in wave three. This was the end of wave two here. Now we're in wave one of the third wave, the beginning of the third wave. So this will obviously subdivide into larger parts, but this is just the base, the beginning, the base. We had a sideways correction, A, B, C, D, E. So there's no more waves required in the correction. And we tried to take the view in the previous videos that what happens if this kept going down. Now, given that E waves are 5 waves, we wouldn't have the room to create that unless we chopped out in a weak 5 wave move potentially. But the way to know that that's most likely not going to happen is by looking at the subdivisions at the small degree and then drawing conclusions. So zooming in to the 15-minute chart from that area, the end of the smaller wave 2, we see that we have a weak 5 wave move, 1, 2, 3, 4, 5. So I took the view that this was a zigzag, A, B, sharp B, zigzag, C, D, E. And once we saw the confirmation of that, after we saw this move up, then once again we have wave 1. Now, to show you this at the smaller degree, I'll have to zoom in even more. So I'm just going to go to the minute chart. Okay, so at the minute chart, wave 1 ended here. And then we had an A, a B, and we had another C, D, E pattern. Now, just so you could see the subdivisions of the C, D, E pattern, I'm just going to stretch it out even more. And you can see that there was a 5 wave move for C. There was a D wave, a very small D wave, and then a 5 wave move for E. We then came back and we broke through that area after some up and down, and then created what's potentially here either a wave 1 at the lows, followed by an A, B, C, potentially a D and E, and then we have maybe what could be another week 5 wave move moving up, or we're yet to see what that could be. Okay, depending on whether or not the D wave here was ever completed to begin with. This could be the D in its total form here. We may see at the open an E wave drop slightly, could even be down to retest the break of the previous wave E back here, as it usually does. As you can see, it happened back here, right? It can do that, and then basically it would then turn around and be in a third of a third wave. So right down to the smallest detail, you can pull apart these waves and see the patterns. Not always clear immediately, but just give it some time. At the smaller degree, it's harder to notice, or to actively label them as you go. It takes practice. But all in all, the recent price action is setting up for a bullish move. So some of the downfalls of analyzing waves like this is that sometimes they can produce zigzags which then revert. But given that we saw this wave 1 here and just a correction, it doesn't seem likely that it's just part of a zigzag. Wave 1 was this length, the whole correction is that length. So for it to be a 5 wave move completed, it really wouldn't fit a zigzag profile. So to me, I'm confident that it's not that, and the previous count was correct, because the previous count, it gives you the clue for what's next. That's important. That's why if you don't get the first part right, you can't get the next part right. And that's the key to what I do. That's why a lot of times I have been wrong, misidentification of waves, or just not much practice, or still getting used to the methodology over the years. You can definitely cause errors, but in this particular case, it looks good. So just going back to, say, for example, the daily chart, let's just remove all the labels. In this particular way, you can't really see all the subdivisions very, very clearly at the daily chart. It just looks like a whole bunch of chop at, to the naked eye, I suppose. It does look like a 1 and a correction, or a 5 wave move and a correction. And then you see this moving up in 5 wave pattern. Fine. That's all good, but I like to get down to the small degree, because when you do so, you can basically know where to put your stops. Where are the points of support that can't be broken, right? So the first one was down here, can't be broken after we confirmed. The next one will be once we break this high up here, right? Because 1, 2, the E wave of the 2 needs to be broken, and that's at 60.68932. That's the area of importance. That will confirm that we are going to move higher. And I don't see it being anything else at this stage, due to having already identified all the corrective waves for the previous wave 2. That's why it's labeled there. So now I just envision that this will be basically, continuing higher. So yeah, hopefully you found this explanation informative. Thanks for watching.